Uh, so, just how you are thinking about the correction that we have. What's the frame? Would you use a particular framework, like, for example, what we saw, like the first trade war in 2000, the last trade war in 2018, or the COVID period, or something before that? And how much have we lost? Where we are? Just your thoughts, Prashant.
One, India's exports of manufactured goods to US is just around 2% of our GDP. And so the impact should be quite small in that sense, right, of these tariffs. Second, our tariff gap with our key competitors in exports, goods exports like China and Vietnam has actually increased. So it's a small advantage. But in any case, it is just 2%. So I don't think that much is going to change. Now, as a result of what is being done, oil is down. And since US fiscal deficit should move down sharply because of the tax collections that will go up, the bond yields have also moved down. These two should work to our advantage significantly. And finally, I think the US stock markets have fallen very sharply. As we all know, last few years, US markets have been the biggest recipient of equity flows worldwide, what came to be known as US exceptionalism. I think this might just mark the change of that trend because the negative impact on the economy of the wealth effect erosion in US might even lead to some sort of a slowdown. So I think if US is no more the favorite country, most other countries which are resilient, and that certainly includes India. But reasonable value does not mean 15-20% kind of returns. I feel matlab, near GDP, nominal GDP growth rates, 10-12% kind of returns is what would make sense to my mind over a 2-3 year period. Yes.